Hi, welcome to the 19th May 2022 edition of the daily dose of the markets. So today again a very eventful and ominous day for the Indian markets. Nifty 50 collapsed more than 400 points. Bank Nifty collapsed 850. Nifty IT the most fell by 1725 points. So what exactly happened? In yesterday's session, we saw an evening star getting formed on Nifty and Bank Nifty, and we left with a note saying that it doesn't spell well for the markets. So overnight, Dow Jones collapsed more than 1,100 points, primarily because the retail inflation in the US is peaking, and the rate hike by the Fed doesn't seem to be enough or to kind of taper that inflation and bring it down. And what really happened was Target stores came out with their quarterly results and came out with very disappointing results, which actually threw up pointers that inflation was biting into the pockets of the consumers. So people were spending less and were consuming less. So this is not a good sign at all. And this led to the markets getting nervous as to whether a recession was in store for them at some point in time in future. So this nervousness led to Target the stock being hammered by more than 24%, and it brought down Dow Jones and also brought down Nasdaq. Now, Nasdaq was always falling, and it further fell because Morgan Stanley, came out with a report saying that IT will underperform in the current year, so and valuations were too high, and that had a ripple effect on the Indian indices as well. So let's try to understand and as to how this played out here in India. So the evenings on star on 18th May on the daily charts proved to be too ominous for Nifty, and from the word go, selling continued unabated, knocking off 430 points of the index. The fall was contributed by Nifty IT, 1725 points, Bank Nifty 850 points, Nifty Metal 232 points. Remember, banking has a 20% weightage on Nifty. So, 850 points itself translates to about 150 points of the main index. But however, Nifty has managed to hold 15,800 for now. In the 18th May video, also we had remarked that probably the trading range, the revised trading range for Nifty appears to be 15,800 to 16,400. So it has kind of respected that zone for the time being. In case of Bank Nifty, the evening star on 18th May also proved to be too ominous. And from the word go, selling continued unabated, and it knocked off 850 points. And the fall was universal. All banks, private banks, PSU banks, all of them crumbled. However, Bank Nifty has broken three key support zones, which I had kind of highlighted yesterday: 34,000, 33,800, and 33,500. So my last point of reckoning was 33,500, and somewhere I got a feeling that 33,500 will be respected in today's session, but that did not happen, and it broke 33,500 as well to close a little above 33,300. So now the last crucial support is at 33,200, and if this breaks, then probably another 500 point nosedive for Bank Nifty is not ruled out. So assuming that it will hold 33,200 and move up again in the coming sessions, I now kind of draw the trading range for Bank Nifty to be 33,200 to 34,200, so above 1,000-point range. Now let's understand, why did the IT index crash 1725 points? So we were so bullish on IT index. In fact, in a couple of sessions back, I had spoken about a falling wedge pattern squeeze and a possibility of IT index moving up by 4,000 points. So things worked well the following day, but the day after, that was yesterday, it completely gave away. So now let's understand the background as to why did the IT index crash 1725 points today. So usually a falling rupee, it augurs well for IT stocks since revenue recognition increases on account of dollar strength. However, despite this being the case, the dollar has been steadily rising over the last 4 or 5 months. IT has been correcting since the last 4 months. Um, so, so this was very strange as to why is this happening. Now, the falling wedge pattern squeeze breakout that occurred on 17th May, we had predicted a 4,000 point kind of a up move that was possible, and we got that confirmation on the very next day by way of a 800 point breakout and another 400 point intraday breakout on 18th. But post lunch on 18th, that was yesterday, the stocks gave away and closed in the negative. So the background to this is a Morgan Stanley report downgrading frontline Indian IT stocks such as TCS, HCL Tech, Wipro, and Tech Mahindra. Probably this report was in the know of several people in the market, but probably it got public yesterday, and then for the majority of the investing public or the fraternity, the impact was felt today. So if one goes to the technical side, the daily charts also indicated a head and shoulder pattern that had a target depth of a 5,000 point fall. So let's try to see how this has played out. So let's go to the IT index. This is the daily chart for Nifty IT. If you see, the band that is marked in green is the head and shoulder pattern. Now this target is the 5,000 point fall target, which if it placed at the neckline exactly gave 5,000 points, which actually ended today. So hopefully the selling in IT stocks should end. Now the 4,000 point up move that we had given was on the 16th of May, and it was followed by a nice green candle, a bullish candle, which also reclaimed the 8 EMA. But the next day's breakout was where this entire up move failed, probably because the market got a whiff of the Morgan Stanley report that was about to be published, and the stock started correcting. And yesterday, when it was officially made public, this morning it impacted, and then right from the word go, many of the frontline IT stocks like TCS, Tech Mahindra, Infosys, Wipro, HCL Tech, all of them collapsed anywhere from 5 to 6%. So the 5,000 point fall exactly closes at about 28,184. And that's exactly where the index has also closed today. So it made the low of 28,201, taken a little bit of support and closed a little above. So hopefully the selling should end with the oscillators also getting into an oversold zone. So as far as Nifty and Bank Nifty is concerned, they are also weak, but somewhere looks like Bank Nifty as well as Nifty might support, has reached the lower end of the support. So probably it should stabilize from here and again make a re-attempt towards making a little high. But as I said in yesterday's video, this market needs a lot of good news for the rally to be maintained and to be kind of continued. So I believe that the market will remain choppy for quite some time, and it will trade in a clear range. If you do like this educational video, please do press the like button and also subscribe to the channel by pressing the bell icon. And we do hope to provide you with more information about markets on a day-to-day basis. Thank you so much and have a great day.